Hi everyone, welcome to a brand new episode. I'm Marcus. Today we're looking at Walmart, ticker symbol WMT. We'll cover the income statement, balance sheet, cash flow, key figures, our key feature, the technical analysis of the stock. Is Walmart worth buying right now? Let's find out. As I mentioned, we'll look at Walmart, ticker symbol WMT, and they are traded on New York Stock Exchange and are in the trade and service sector. If we go down to the screen, we can see that their market capitalization is at $375 billion and the revenues at $572 billion. Now the PE ratio coming in at 47.6. Now normally I like companies with a PE ratio of 20 or below, so having 47.6, that is just way too high. Now when you see a stock with a high PE ratio, that tells you that the market expectation of the stock is high, and therefore there's a good chance that you see capital gains on those stock. But the overhanging risk here, guys, is that if the company is not able to meet those expectations, we will see the stock price fall. Same thing goes when you see a stock with a low PE ratio. That tells you that the market expectation of that stock is low, and there's not a good chance that you see capital gains on those stock. Just keep that in mind. So having a PE ratio of 47, that is too high, so that is a no for me. Profit margin coming in at 1.4%. I like companies with a profit margin of 15% or higher. So having 1.4, that is just way too low. So that is a no for me. Price to sales ratio coming in at 0.65. I like company with a price to sales ratio of maximum 4. So having 0.65, that is within my range. So that is a good to go. Now price to book value coming in at 4.5. I like companies with a price to book value of maximum 3. So having 4.5, I understand it's not far from the threshold, but it's still higher than what I normally like to take a look at. So that is a no for me. If we were to summarize, the PE ratio is too high, price to sales ratio within my range, and price to book value is too high. That tells me that Walmart at its current state is overvalued. Now they pay out a dividend of $2.19. I like it because I like those recurrent income. So that is a plus for me. Effective return at 1.6, that is a bit low. I would like to see an effective return at least a 2.5-3% range. That would be acceptable. So 1.6, that is too low for me. Now I understand there are a lot of stocks out there with much higher return, but I want you to be very careful because there is a good chance it could be a trap. You may get good return on those stocks as long as you hold those stocks, but when it comes time for you to exit the stock, you might not get a higher price than what you bought it for. So be clear that when you see a stock with a high return, just look at the history and see, will I be able to have price increase on those stocks? Just keep that in mind. Return on equity coming in at 9%, a bit low, but still positive. Basically, return on equity tells you about a company's ability to create return on their equity. As for an investor, when you have especially a stock that doesn't pay out any dividends, you want to make sure you have a company with a positive return on equity, because that tells you that they are able to create return on the capital you're about to invest in them. So 9%, a bit low, but still positive. I like that. Return on assets at 7.4%. I like that. So that is a good to go. Now, the stock is currently traded at $135 per share. If we go down to the moving average, we can see that we are below the 50-day moving average, but also below the 200-day moving average. So this tells me that the indicator tells us that we might see the stock price fall. But if we take a quick glance at the chart, we can see that we have been consolidating over quite some time now, but lately we have been seeing lower and lower levels, also indicating that we have been seeing a descending triangle. But we'll take a closer look at the technical aspect of the stock further down. But let's jump over to the income statement, and what we can see here at the income statement is that the total revenue went from $485 billion in 2017 and grew to $559 billion in 2021, and the numbers have been growing steadily every year. That is a plus. Gross profit went from $124.6 billion up to $138 billion, and the numbers have been growing steadily every year. That is a plus. Like that. Now net income went from $13.6 billion down to 13.5, and we can see here that we fell 2 years straight, and improved and then fell again. So this is a negative trend, so that is a minus. I would like to see a positive development here. Let's jump over to the balance sheet, and what we're interested here is that the current assets versus the current liabilities, and we can see there is not a huge difference between the current assets and the current liabilities. And if the company were to convert the current assets to cash, they are not able to pay off the current liabilities, and that is negative, and they are far from being able to pay off the total liabilities, which is also negative. And if we take a quick glance on the total liabilities, we can see it went from 121 billion up to 171 billion, and the numbers have been growing, and we can see a huge jump between 2018 and 2019, and this is negative. And I would like to see that they start reducing the total liabilities, and also reduce the rate which is the total liabilities are growing. Now if we jump over to the outstanding share, we went from 3.1 billion down to 2.8 billion, and the numbers have been falling for the last 5 years. That is a plus. Basically, what this tells you is that the company is doing buybacks, meaning that there are fewer and fewer outstanding shares, meaning that your share of the company is growing. When you see a stock issuing shares, a company issuing shares, that means that there are more and more available shares, meaning that your share of the company is decreasing, is being diluted. And there's a lot of investors that either skip this part or doesn't know about it, because they be looking at the balance sheet and see a company with a lot of assets, and the debt is not growing that much, which is positive, which is great. But on the other hand, we see that the company is issuing more and more shares, meaning that their investors' share of the company is being diluted, because that's a way for a company to bring in more capital without taking on more debt. So seeing that the company is doing buybacks, that is a plus. I like that. Now let's jump over to the cash flow. And what we're interested in here is that the operating cash flow versus the capital expenditure, and we can see the operating cash flow landed at 36.1 billion and capital expenditures at 10.3 billion, making it a difference of 25 billion, which is a plus. We can see that the operating cash flow went from 31.7 billion down to 36.1, and we fell 1 year, and then we a couple of years, and then improved in 2021, but overall trend is negative, so this is minus. Capital expenditure haven't moved that much. We can see that the numbers have been falling a couple of years, but it's still an improved, still stable development. Not much have happened here, so this is a negative. I would like to see them continue to invest in the business, but the numbers are stable, which is positive. But so I've given them a minus here. Now let's jump over to the key figures, and what we can see here is that the earnings per share went from $4.4 per share up to 4.7, and we fell off here a couple of years, and then we improved and fell off again. So this is negative. I would like to see a positive development. Revenue per share went from $158.6 per share up to 197, and the numbers have been improving every year. That is a plus. I like that. Equity per share went from 25.4 up to 28.6, and we can see that the numbers have been growing, and we fell off and then we grew again. So this is plus. I like that. Dividend per share went from $2.03 up to $2.32, and the numbers have been improving every year. I like it because I like those recurrent income, and also that the income is growing every year, so that is a plus. Dividend share, we can see a bit of fluctuation, 45%, 62, 98, 40, 48. I like this one because I like companies that pays out less than 60%, because I want some of the capital to remain in the business for investments, acquisitions, and just strengthen the business overall for uncertainties. So that is a plus. Gross margin went from 25.6 down to 24.8, and we can see that the numbers have been falling every year. That is negative. I don't like that at all. We improved in the last year, but overall trend is negative. They need to find ways to become more efficient, and we can see here in 2021 a gross margin of 24.8%. Imagine selling something for $1 and you get to keep 24.8 cents of that dollar. You still have your operating costs to cover. These numbers need to improve, but we also need to compare this number across the industry and see how the company is doing compared to their competitors. But the overall trend here is negative, so I don't like that at all. Operating margin went from 4% down to 3.6%, and also here we can see that the numbers have been falling. We improved in 2020, but then fell off again, so this is negative. Profit margin went from 2.8% down to 2.4%, and also here the numbers have been falling. We improved in 2020, but then fell off again, so this is also negative. Return on equity, as I mentioned, tells you about a company's ability to create return on their equity. As for investor, you want to make sure you have a company that is able to create return on the capital you're about to invest in them. And we can see that they went from 17.5% down to 16.6%. And also here the trend is the same. We fell off a couple of years, improved in 2020, and then fell off again. This is negative. Return on assets went from 6.8% down to 5.3%, and also same thing here, the numbers fell and then improved in 2020, then fell off again, so this is negative. Solidity tells you about a company's financial strength for the long term, and we can see that we went from 39% down to 32%, and also the numbers have been falling every year and improved in 2021, but overall trend is negative, so this is a minus. Balance sheet liquidity went from 1.37 up to 1.55, and the numbers have been improving. Then we fell off again couple for the last 3 years, but the last year is better than what we started off, so that's I have to give it to them that the numbers are better than what we started off, but the overall trend is negative, but I'll give them a plus that we're still positive, higher than what we started off, but they need to find ways but still positive. Now, debt ratio went from 1.56 up to 2.12, and the numbers have been growing every year, so this is a minus, and they reduced in 2021, so this is a minus. So basically a debt ratio in 2021 of 2, that tells you that the company had 2 times more debt than equity in the business, and seeing that these numbers are growing is negative, so that is a minus. Now guys, we have gone through the income statement, balance sheet, cash flow, the key figures, and now over to our key features, which is the stock analyzer. And what the stock analyzer is that it gives you a simplified, holistic overview of the company's performance. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. If you go down to the screen, we can see that the PE ratio is above 20, which is negative. The company pays out a dividend, which is a plus, and the dividend payout share is less than 60%, which is a plus, and the dividends increased over the past 5 years, which is a plus, and the numbers of outstanding share have decreased, which is a plus. Revenue increased over the past 5 years, which is a plus, and profit margin below 15%, negative. Profit decreased over the past 5 years, which is negative, and the current assets is less than the current liabilities, which is negative, and solidity decreased over the past 5 years, negative, and balance sheet liquidity increased over the past 5 years, which is positive, even though we have seen lower and lower numbers the last few years, which is a plus, but that they are higher than what we started off. That is why I gave them a plus. Debt equity ratio increased over the past 5 years, that is negative, and the total liabilities have grown for the past 5 years, which is negative. Guys, as you can tell, it gives you a simplified, holistic overview of the company's performance. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. You can have this software along with everything we've gone through, plus access to our discussion forum where you'll be able to chat with me along with other members for only $10 per month. So make sure to jump over to commerce.sc and become a member today. I'll put a link in the comment section below. Okay? Thank you. But now let's jump over to the technical aspect of the stock. So here we have the chart. As you can see here, that we have been moving in a positive trend channel for quite some time, but have lately been more or less consolidating, and recently we can see that we have been forming a descending triangle. And also what is clear to us is that this support line have held a couple of times, indicating that we are right now within a key area. So what could happen here is that we could see a lot of traders coming in and buying the stock with the hope that the stock price will increase. But the overhanging risk is that this resistance level here, as you can tell, the chances of it breaking is not that huge. So what could happen here is that a lot of investors or a lot of traders may be stopped out right here and see the stock price go back within the triangle. But if you were to trade this stock, if I were to trade this stock and get tapped out here, well, we could see a move of 5%. And even though we see there is a lot of buyers potential coming in here for a price move, we could see if the price were to break above this area towards this resistance level right here, we could see a potential of 10% move, which is not bad. It's not huge, but it's okay. That's a way to trade the stock. But with everything that goes on in the economy right now, I would like to wait until at least April, May for the market to reposition itself and then take a stand on that. But on the short term, we could see that the price could break below this level and try to do a retest. And if the price goes back down below this area right here, and then we could see the price continue to fall and potential area for a buy. And I like this company because it's large and stable. They pay out dividends, and the dividends are growing every year, and the payout share is within the 20 and 60% range, which is positive. And also that the outstanding shares are decreasing, the company is doing buyback, which is positive, and the revenue have been growing every year. Capital expenditure are stable. Revenue per share is growing every year. Equity per share is in a positive trend. So there is a huge potential here if you were to hold. But because another scenario is that we could see this stock continue to consolidate for quite some time. And the great thing about that is that you could be buying a lot, accumulating a lot of share and just earn those dividends, because the company has some challenges. In my eyes, it's currently overvalued with a P ratio above 20 and the price to book value at 4.5. So in order for it to become more attractive, we need to see the price fall, or that the earnings increase. And the return on equity is a bit low. I would like to see higher numbers. And the company's low profit margin, and it fluctuates a lot. The gross margins in a negative trend. The operating margin also in a negative trend. The earnings per share also in a negative development and fluctuates a lot. And the operating cash flow in a negative trend. Now the moving average indicates that we might see the stock price fall. So we could see something like a breakdown towards this resistance level, and that could also be an area in order to buy the stock and just have the price move up and down for a price move of 5 to 10% and just earn those dividends. And the current assets is less than current liabilities. The total liabilities are growing every year, and solidity is in a negative trend, and the balance sheet liquidity is also in a negative trend, and the debt ratio is growing. So there's a huge challenges here, but overall it's a large and stable company. So I would like to see the price in April, May, the price continue this path here, and this will be where I'll be buying the stock, because I would like to have those recurrent income and also a potential chance for a capital gains up to those levels and even potentially higher. So that's how I would trade the stock. How would you trade the stock? Please let me know in the comment section below, and let me know what stocks you want me to take a look at. And please give me a thumbs up, comment, subscribe, and until next time, guys, take care. Bye bye.